Hello everyone. This is the pre-market report video for today, 30th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. My previous pre-market video was on last Thursday, and in the last 4 days there had been a number of significant events. For everyone's benefit, I will quickly cover the important macros happened on Thursday and Friday that we need to know everything in 1 minute or so. First of all, on Thursday night, US government released their first December quarter GDP estimation. The data came as 3.3%, though it was comparatively less than the September quarter. It was 1.3% higher compared to what analysts expected. So economical wise it is good, but in interest rate cut wise, which we will discuss in a moment. Second, then on Friday, US Department of Commerce released the December month PC inflation data. If required, please pause and have a look. This is very important since US Fed's future interest rate decision will be always based on this. Just for info, tonight FOMC meeting will be starting and tomorrow night they will announce about their interest rate decision. At present, the expectation and 99% probability chance that Fed is going to pause the interest rate decision. No problem there. But every investor is kind of looking for the Fed chairman's press conference and expecting some clues about their interest rate projection in the upcoming March month. Anyway, now back to Friday PC inflation. The top is core inflation month-on-month basis and year-on-year basis, whereas the bottom one is the headline inflation, which is nothing but core inflation plus food and oil inflation influence. Again, headline inflation also in two bases, both monthly and yearly basis. Here, most of the data comes in line with the expectation and it haven't increased compared to November month. The headline inflation was still around 2.6%, which was very close to Fed's target 2%. All are good. The more good one was core inflation. On yearly basis, it dropped below 3% for the first time in the last 20 months, 2.9, which is really mega good. I mean, we discussed this lot of times. Core inflation is the more important one than the headline inflation. Now, please have a look at the graph. In the last 5 months, it was dropping very much consistently and significantly, all the way from above 4% to below 3%. This PC inflation data together with the GDP data improved the global sentiment massively. And the moment the data was announced, the Fed probability tool chance for March month interest rate cut increased from 40% to all around 47%. So that itself very much positive. In addition, on Thursday night, US government crude oil inventories data showed that US government's strategic petroleum reserve dropped by over 9 million barrels of oil, meaning there was a sudden increase of demand coupled with cold weather warning in Europe for February month, and this Middle East conflict increases the oil price, which in turn increased the most of the US oil companies to increase around 3 to 5%, especially the one who send oil to Europe. For example, here this is the Exxon oil company share price movement, largest oil company in US. On last Thursday and Friday alone, it increased around 6%. So before yesterday morning Indian market opening itself, there was an improvement in the global momentum and the huge expectation on oil companies. In line with that, yesterday Indian market was driven by just oil companies. I mean, please look at the sectoral index. Energy, oil and gas as a whole sector, it increased over 5%. In that, Reliance and ONGC, who are the top diesel exporters to Europe, increased 7 and 9% respectively. Major sector wise, yesterday only media and FMCG closed negative, all others closed positive. Regarding institutions, finally FII trade value dropped, both gross purchase and gross sales dropped below 20,000 crore rupees. I mean, in the last 3-4 videos, we did discuss about this FII portfolio reshuffling due to the SEBI rule. Now the deadline is crossed, so the trade values are returning to its normal. Anyway, after net selling for over 36,000 crore rupees, yesterday FII turned as net buyers. The net bought for 110 crore rupees. Similarly, DA net bought shares worth approximately 3,320 crore rupees. Then after our market hours, US market continued its positive rally and hit the fresh all-time high value. Last night US Treasury said that they expect to borrow only 760 billion US dollars, which is over 50 billion US dollars less compared to previous forecast, which in turn made the 10-year bond yield to drop over 2%. Hence the positivity. Dow Jones increased by 0.59%, S&P 500 up by 0.76% and Nasdaq up by 1.12%. But the concerning fact was US VIX increased 2.5%, hence the value moved above 13.5. Usually, if the US market closed positive and also VIX increased significant means, then the following day, most probably the US future market might turn to negative. If the US future market turned negative means, then that will affect our Indian market as well. In case of oil, yesterday Hong Kong court orders the Evergrande to liquidate their asset and to pay up their due, which in turn raises the China demand concern and pushed the oil price down by 1.5%. At this time of this video, WTI crude oil trading at 77 US dollars per barrel and Brent crude oil trading at 82 US dollars per barrel. Coming to Indian ADR, as it is, HDFC Bank dropped over 2%, Infosys marginally down, whereas Wipro and ICICI Bank marginally up. But we can't take this as it is because all those companies did advanced significantly on last Thursday and Friday night. If required, please pause and have a look. As a quick comparison, I plotted the 1 month arbitrage change. As we see, all 4 companies trading at least over 1% positive compared to Indian market. So the takeaway is, if the ADR indicating any means, it's just positive only. Again, it doesn't mean that it will trade positive in Indian market today, just for the indication. Regarding GIFT Nifty, at 3 AM Indian Standard Time, it further increased and closed at 21,959. At present, the premium is around 120 points, which is kind of indicating around 100 points gap up opening. As a summary, US market closed positive. In line with that, GIFT Nifty and Indian ADR indicating the gap up opening. Additionally, yesterday, Chief Financial Advisor of India submitted the India's economy survey for the next financial year to the Finance Minister. As per that, India expect to grow over 7+% positive in the next 3 financial years, which in turn expects India to cross 5 trillion US dollars economy. From my perspective, the report we can consider it as positive, but we don't know, maybe professional investors might see it differently. Moving on, there were mixed earnings results in Bajaj Finance and some FMCG companies like Marico and ITC. So those sectors or at least those companies will be on focus. And also this new China's Evergrande problem and US VIX increase kind of concerns as well. Then as per stock open interest, SBI Cards, AU Small Finance Bank, ITC and L&T Mindtree and Marico got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Godrej, Indigo, National Aluminium, Coal India and Bharat Forge got an increased open interest with a positive price close, indicating the long build-up. About the things to look out, Dr. Reddy's, L&T, Bajaj Finserv, Adani Total Gas, KPIT and M&M are some of the major Indian companies' earnings results are scheduled released today. Then regarding global macro, Germany's and Europe's GDP data are due to release in the afternoon, and then in the night it's just US consumer confidence data and number of job openings are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 80 points gap up above 21,400 and gained solid strength as the day progressed and closed above 21,700. Thus, on the daily chart, it formed a strong big green candlestick pattern indicating sharp upside reversal in the market. However, it is premature to say, but there is a possibility of forming an inverted head and shoulder pattern. At present, Nifty is currently placed at the edge of another resistance at 21,750, which is the previous swing highs and also the upper part of a long bear candle which formed on last week. Hence, the overall chart pattern suggests a possibility of an upside breakout in the short term and which can increase up to 21,850, which is also a significant hurdle since that was the first gap significant down from 22,100. Decisive breakout and closing above 21,850 might push near to the all-time high value. Immediate support is to be watched at 21,600 levels. In case of Bank Nifty, it defended 200-day exponential moving average 44,580 in the previous two sessions and moved near 45,500. Thus, on the daily chart, it formed bullish candlestick pattern with long upper shadow. That's the first positive. Second, Bank Nifty negated the lower high, lower low formation and now it has to continue to hold above 45,250 level for a bounce towards 45,750, then 46,000 mark. While on the downside, the support is expected at 45,000, then 44,750 level. Regarding weekly options front, the maximum call option open interest was at 22,500 strike followed by 22,000 with meaningful new call option writing at 22,400 strike, then 22,500 and 22,000. Thus, the options data indicated that Nifty may gradually inch towards 22,000 mark in coming sessions. Whereas on the put side, the maximum put option open interest was at 21,500 strike followed by 21,000 and 21,600 with new put option writing at 21,600 strike, then 21,500. Hence, the support is at 21,500 to 21,600 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.